I mean, I had a friend of mine text this weekend, and she said to me, are we going to war with China? And I was like, whoa, what are you talking about? And she goes, well, I just feel like they're going to invade us and we're not going to win. Alibaba stock is down big today. Why is it down big? Well, I think I have a theory. Mo, what's your theory? Oh, actually, it's up now. What?
Mine's Chinese balloons.
Yes, by the way, that's exactly what I thought.
Oh.
By the way, it was down just literally 20 minutes ago.
Maybe we got another balloon.
So guys, I believe the recent information that's been happening about these balloons coming over, it's going to cause tension. So first off, if this causes a problem for you, you need to avoid companies like this. And the reason being, by the way, you probably need to avoid investing in individual stocks in general if news like this causes problems. This is not for the faint of heart. There are going to be issues. I mean, I had a friend of mine text this weekend, and she said to me, are we going to war with China? And I was like, whoa, what are you talking about? And she goes, well, I just feel like they're going to invade us and we're not going to win. This is a lawyer that went to school at one of the top 30 or 50 law schools in the country. And she literally was worried about us going to war with China and us losing if we went to war with China. I laughed. And Mikey chimed in and said my sources. It was pretty funny, and I love this. She is a great girl. She's wonderful. She's awesome. But it was just funny, and I tease her all the time going, is this a serious conversation? She's like, yes, I'm really worried we're going to go to war with China.
Surely you can't be serious.
I am serious. And don't call me Shirley.
I'm like, okay. So this is how we have to look at investing. Investing is made up of the short run. Let me pull up the S&P 500 in our charts. Guys, look what's happened in this world in that time period. Look what's happened. You know, I'm on Twitter, and it's going to pop up below. And I suggest you follow me because I talk a lot about investing and the markets, and it's amazing to me. When I talk about a stock, I'll get so many comments about, Paul, here's what you don't get about the stock. Mm-hmm. And it's usually these minute details that I'm like,
do those really matter over a long period of time?
Guys, what minute details
they're in the moment details.
You know what matters to me? Overvaluation. Overvaluation. That's all these things fell by 50 or 60% because of overvaluation. Are there small details here? You know, when BlackBerry was around and killing it, people could have said, hey, Paul, Apple has this amazing phone. Fair enough. But that's the rarer case than most.
Yeah.
To me, if you have a good company with good cash flow, with a high return on invested capital, and selling for a reasonable price, will some not work out? Sure, but that's why you own 10, 20, 30 companies. Because some will probably do worse than you think, a few will do way better than you think, and most of them will do pretty decent.
Right.
And that's what we're here preaching on this channel. Don't worry about the minute details. Mo and I, what are you gonna say, Mo?
Literally my only concern with, and it's long term, and it's not even that much of a concern, is that the Alibaba's fraudulent numbers. That's my only concern, but it's not really a concern. Well, you know what I mean? But that's like my only weird thing that I look at and say, outside of balance sheet, cash flow statement, income statement, what I'm seeing as far as their growth and everything, that's my only concern. But it's
a concern of mine.
Yeah.
And my personal take is, Charlie Munger trusts it, I will. I'm not copying Charlie Munger, but I am trusting his analysis of the company, saying, but guess what? I have no idea what Charlie Munger values Alibaba at.
I mean,
nor do I care.
I mean, I believe this is a company that Monish held as well. I have no idea what his thoughts
Monish held it, and he exited, and we talked to him about it, and he literally said to us face to face,
tax loss harvesting.
Guys, it was tax loss harvesting.
And the fact that he trusted it, and Munger, I'm sure they have some pretty good connections wherever, and they're probably saying this is a legit company.
And wasn't there talk of Alibaba moving to Singapore?
Yes.
Listen, I don't know what the future holds. However,
that's good news.
If I have 30 companies that I could look at, like Alibaba, I'm going to be very interested in them. Now, the question is, are they selling for the right price?
Right.
That's the question. So let's start taking a look at Alibaba and see if it's possibly selling at the right price. So a couple things. First off, market cap, enterprise value. That is quite the difference, actually, there. Now, it's because this difference here is essentially the debt. Market cap is if you bought all the shares outstanding. Enterprise value is you bought all the shares outstanding and bought the company with no debt, net of all cash, etc. That's the roundabout way, and there's specific, okay, but the bottom line is that's what that number is.
It's interesting, though, if I'm looking at the 8-pillar sheet as well as all the data. They could pay off their long-term liabilities in less than 2 years.
For their free cash flow.
Exactly.
Because in the last year, they had $22 billion in free cash flow, $18.7 billion on average the last 5 years. But here's the interesting part. Look at their net income, was $2 billion last year, but their free cash flow was 22.7. So that's an immediate, like, wait, what's going on here? I don't like it when it's the other way around. I love this.
Yes.
Because everybody's going to focus on this 1 year PE of 134. They're going to say, oh my God, it's a 134 PE. And I'm going to sit there and say, wait a second. If it's legitimately a 134 PE, how is their free cash flow so high? Right. So what do? We go to the income statement. And we're going to look at the annual income statement. Right there, boom. Right off the dribble. Special income charges. Minus 3.7 billion. What was it in years past? Okay, very little. Actually, a lot of them were gains.
Yep.
Then look below. Other income and expenses. Previous year was 1.1 billion, 1 billion, minus 2.4. So we dropped immediately. Immediately just dropped $6 billion right there. Just like that. Let's go to the 4 quarters. 3.7. Oh, yep, and 2.25. Boom, done. Guys, they went from 20. Now, it was decreasing. I get that. I'm not denying that at all. But these are things that I look at going, and there's an explanation. That is why this software is so important. Right here, off the dribble, you can look at 2 billion and 22 billion and go, there's an issue here. Now, return on invested capital sucks.
Whoa.
Yeah. Now, why is that? My guess is has a lot to do with something like this. This probably drove it down a lot. But that is bad. Don't get me wrong. That is not good. All right, let's check out the 8 pillars like Mo was doing. Shares outstanding. But they did announce a share buyback, I believe.
They did?
I believe, Google it. Sure. I believe they do have a share buyback
like
coming.
$50 billion or something?
I don't remember. 5-year book value growth, 22%. 10-year book value growth, 69%. Return on assets, 7.4, which is another way of looking. What is it?
$25 billion.
25
From
billion.
15. Okay.
Yeah, they increased it.
That's right. Yes.
All right. Let's see what analyst estimates are for Alibaba. Now remember, in Alibaba, this is going to be based on their currency because we don't convert it over. It's not about looking at the actual numbers. It's about sitting there and looking at the growth level. So here's earnings per share. Okay, there's some earnings growth. Now I will make comment. Down here, it's only 3 analysts on each one when we have 40, 43, and 31. Yeah. And remember, guys, you still need to be independent of the analysts. I just like to look at this to get a gauge of where analysts are. I don't take any analyst report with anything other than okay, let me check it out. Revenue-wise, is this shocking to anybody? Just revenue growth, that one's not great, but down here, guys, it's a huge company. It's located in the fastest growing economy in the world. I mean, not fastest growing, but fastest growing large economy in the world. And I want everybody to remember, China will be a bigger economy than ours. Get ready for it, accept it, it's a reality. It's not a bad thing. Great Britain still did phenomenally well over the last 100 and 200 years, even though we crushed them economically. But Great Britain still did very, very well, and people are still very wealthy in Great Britain. Don't fall for these traps of, they're better, they're growing faster, therefore they're better than us. No, that's stupid. And if they become better than us, great, more power to them. We're still in a world that the pie is growing bigger and bigger, and our slice of it will get, as a percentage, smaller and smaller. That's okay, because our piece of the pie will still be growing, even though it's a smaller percentage. Think about that, rewind that, and listen to that again. Mo, what were you going to say?
Nothing.
Oh, they're going to say something. Nope. All right. So the question then becomes, what do we pay for the stock?
Yeah, exactly.
Now, Baba is a company that I think is going to be around for a very, very long period of time.
Yeah, I mean, they dominate over there.
And our stock analyzer tool is a way that you can analyze from 1 year to 20 years on what the company could do, because every investment is the present value of all future cash flow. Now, for this software here, this stock analyzer tool was used 1.3 million times last year. If you like this, we have a special, $7 for 7 days, and our newest tier is going up from $29 to $39 a month very soon. So if you sign up now, you get that lower tier price. Check it out, guys, everythingmoney.com. Mo, you do the 10-year analysis, okay. I'll do the 20-year. Okay. So here, guys, we're trying to make estimations on a wide range, low, middle, and high for these revenue growth, profit margin. So I'm going to do, boy, their profit margin's just been tanking. All right, desired annual return. So guys, remember, our goal here is to make low, middle, and high assumptions. Conservative, middle ones are about low. I always put low for me as this is absolutely the lowest it should be. If they don't do this, they should be shot. Middle is about where they probably should be. And high is like if they crush it. Mm-hmm. Mo, revenue growth, what'd you do?
I did 6, 10, and 14.
Okay, I did 5, 8, and 11 for 20 years.
Okay.
What'd you do for profit margin?
19, 22, 25.
See, that's interesting. Usually I go higher than you. I did 14, 18, and 22. I do think the 14 was ridiculously low, but I'm okay sticking with it for now.
Yeah, the only because I looked at that 1.6 in this year and I was like, oh, that pulled everything.
You're right.
Down.
You're right. I probably shouldn't have. You know what? I'm adjusting. You're right.
Yeah.
I'm adjusting.
Free cash flow margin 22, 26, and 29.
I did 17, 22, and 27.
Yeah, I wanted to go 30. Whatever. 16, 17, and 18 for PE and price to free cash flow.
So I went lower because they're low return on invested capital, even though I think that's a temporary thing.
Yeah, will it stay there? That's the question.
14, 16, and 18.
Okay. And my
Desired return.
Return's the same 10, 12, and 14.
Okay, so guys, remember, the higher desired return, that's more margin of safety. I'm okay getting a market return on this very low side because I think I already beat it up like crazy. Because you can get 9 or 10% by investing in a long-term ETF. And somebody might sit there and say, Paul, why would I want to invest if it's 10%? That's not the key here. The key here is I already beat it up like crazy. If it's really hitting that, I still make 10%. I'm pretty happy.
Right.
So hit the analyze button. What do you got, Mo?
Oof, a lot of green. 174 to 210 on the low end, 333 to 386 on the high end, middle ground, 243 to 288.
140, low side. 270 to 330, high side, middle side, 196 to 227. Guys, thanks very much. Everythingmoney.com, $7 for 7 days. It'll decrease your fear in the markets. Take care.